Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx. Welcome to Market Talks with Dr. Stoxx for this trading day, the 30th of September, 2013. We are in the middle of the day here, and it's an interesting one as we await an important Senate vote to see whether or not the government will shut down for the next few days. This is nothing new. It's happened about 17 times in the history of the U.S. markets, and it tends to be somewhat of a non-event. Markets usually trail off for a few days or weeks during the time, but nothing too major. But it's nevertheless a concern for most traders who want to get a very clear picture on what's going on in the economy. In any case, enough of that. Let's take a look at the charts themselves. What is the main chart of the S&P 500 telling us? We want to get a good, clear read on where the markets are at this point, and see if we can't figure out what its likely path going forward is going to be. So I've got here the S&P 500 as represented by the SPDR ETF, SPY, which is traded just like a stock, as most of you know. I'm going to back out just a little bit. I've got about 8 months of trading here on the chart. Up above, I have the MACD indicator, and down below, I have some volume bars with a 12-period simple moving average overlaid, which will give us a pretty good indication of volume extremes, and that's one of the things I want to talk to you about today. I have a webinar that's out on our site, Chart Reading 101, and I'm in the process of finishing up Chart Reading 201, and it's in that latter webinar that I'll be talking much more at length about volume and how to integrate volume reads into a trading system. But I just want to give you kind of a glimpse of what we do with volume here. So the first thing I always do when I look at a new chart is to draw in the trend lines, do a bit of trend analysis, and I'm going to put a trend line here underneath the lows of this chart. In an uptrend, which this is clearly in right now, you always start with the lows. That's your primary trend line. And then you draw your secondary trend line over the top of the highs, but you always have to keep it parallel to the primary trend line. So we can't get all those highs in there, but we'll put that one in as our sort of our pivot point. And what this initially is telling us is that we are in an uptrend, yes. We're currently trading in the lower half of that uptrend, which is technically then a pullback. But I also am seeing that the recent highs and lows are not quite touching the trend line, which tells us that the price of the S&P 500 is moving into more of a consolidation period, and we may not get any sort of a robust high or low for some time going forward. But when that breaks, whether we get a touch of the lower support line or a touch of the high resistance line, then we'll have a clearer picture of where we're going. And we do have, however, this pullback in the last couple of weeks of trading. And if we had the 50-period moving average on the chart, which we don't, we would see it's right about at that stage, the 50-period moving average. One of the things that's concerning of the uptrend here is that in the MACD indicator, we're seeing lowered highs. Highs are not quite reaching up to where they should be, which tells us that momentum is slowing, which only confirms that we're pushing into a consolidation period. And it doesn't necessarily mean we're rolling over, doesn't mean a bear market is coming, doesn't mean anything like that. It simply means that we're no longer in the robust uptrend that we were in up through May of this year, 2013. We're now into something much more like a consolidation period, which means that the uptrend channel that we have should rather look something like a chart pattern of some sort. We may end up getting a head and shoulders top, we may get a rectangle pattern, we may get a triangle pattern. We don't know just yet, still too early on to tell. But we should be seeing price move into a tighter range of trading with a pattern, a recognizable pattern of subtype forming on the trend. The one thing I want to leave you with before we wind this up is to point out some of the volume patterns that we're seeing. Volume is an excellent way of both confirming a trend and suggesting a potential reversal. Whenever you see volume rising above the simple moving average, as we see very clearly at a number of key points in the chart, that gives us very significant information. volume above the average is significant. Volume well below the average is also significant. So I'm always interested in looking at where do the volume spikes come at in terms of the price chart. We see clearly a set of volume spikes right here, and we see a number of them right here. And looking at more recent action, we have a few in here, and we have a set back here in August, like so. And if we look at where price was trending at that time, we can see that we had above average volume here at the top of the trend where it was hitting that resistance line, and then we also see above average volume at the bottom of that trend where it was hitting the support line. In August, we have heavy volume at the bottom of the shorter term trend, and then we also have some heavy volume at the top. So just looking at that, we can draw the conclusion that volume tends to get heavy at pivot points. If I could leave you with one maxim from today's little discussion, it's that line. Volume tends to get heavy at pivot points. So early in a trend, when we see heavy volume, that should confirm that trend continuing. But when we see heavy volume near the end of a trend or after the trend has been running for some time, then we would be expecting a reversal of some sort. So where does this leave us for now? Well, right now we are in a downtrend of about 2 weeks of duration, and we're at this candle right here off to the far right edge, right at the very end of September, which is also the last day of quarter 3. So my best guess going forward, just based on the technicals, is that we're not yet at a pivot point in the current downtrend. That may come soon, but I don't think we're quite there yet. I would like to see volume spike above the 12-period moving average significantly, at least one good solid day of that, if not 2 or 3, before we could declare a bottom in this pullback. And the fact that we're seeing lowered volume on the pullback suggests that people are really not buying this pullback just yet, that most of what's going on here is selling pressure. And institutional money is maybe behind what was going on, the selling that initiated this pullback. We can see this big volume spike on an uptrend day, but I would very much guess that institutional money was selling those shares to the hands of retail traders, because for the next 3 days it really pulled back quite sharply on a couple of days of above average volume. So once we start to see volume spike above the 12-period moving average, then that would suggest we've got a bottom in for this pullback. So I'm going to go ahead and say that the pullback is still going to continue. We can see a support line, a secondary support line right in this area here, and that would be the first area of support right about 167 for the SPY. But more likely we'll see it pull back into the 165, 164 pivot here, which should give us a bottom. But if it may not, we can always break through that. And then once we break through that and close below that lower trend line, we're looking at a break of trend, which would signal a whole new phase of the market. But we'll worry about that when we get there. So let's just say that this week I am cautiously bearish for the very near term, with support not too far away. So it's not really a good time to be putting on new short positions, but nor is it a good time to be buying a bunch of stuff just yet. I think you'll get better prices in the days ahead. All right, God bless everybody. We'll see you on drstoxx.com, our new website, and bless you until next time. Thanks.